Alright guys, so now let's to the next part, which is the field we are going to be looking at downtrend. So what happens when we are dealing with this case in a downtrend? I'll tell you something, is still the same thing with the uptrend, is just like reverse model of it. So we are going to look at the downtrend where we are going to be seeing series of lower lows, lower highs. So for this, I'm going to use let's use another currency pair. So now we can check something out. Maybe we can use JPY, or yeah, we can use, let's use USD JPY. So let's use USD JPY. So yeah, so for this you can put the time frame on different time frame based on what you want. So I have this on 1 hour. I like doing analysis on the 1 hour, like I said in the previous video, 1 hour, 4 hours, which is for me to see more clearly. Then we take our trade on 15 minutes. So yeah, so now this let's go straight to this. um this phase is for us to understand what happened on a downtrend. So first, we are going to identify, let's look at how the structure is going to look like on the downside. So this is how the structure is going to look like on the downside. We'll have an impulsive movement moving down. We are going to have a correction, which is the market correction, following by another impulsive movement causing a break of structure. Do not forget this break of structure. Impulsive movement again. We have a correction. Also again, the correction we also most likely form at this support resistance region here. This is a resistance region here. So then we'll have another downside movement just like that. You understand? So your correction might be able to here take out some liquidity before going back down. So this is what you are going to be seeing on the structure of a downtrend. So now, just like the uptrend, what you want to do whenever you have the structure is you want to sell. So what you want to do is you want to look at the higher price. You want to look at the higher price and you want to sell. So because if you have a structure, like this, you have something like this coming down here, and the price is here already, and you want to sell at that particular region. So if you are selling at this particular point here at 148.866, then this price might just move down a bit, then retreat back down, and this retreating back down might have taken out all your liquidity. It might even retreat to somewhere here before reversing back like this. So why should you sell at this point where you can actually wait for the correction before selling? So this thing is also very simple. You have a goods with you. Do you want to sell at a higher value or you want to sell at a lower value? Now this is something you have. You can see, let's say you are selling you bought let's use the t-shirt. You have the t-shirt with you which you bought with 90 bucks, and now you can see that due to some cost of material or some other thing, now the value is now at 95 bucks in the all market value. You bought this thing at 90 bucks and you know that you can easily sell this thing at 100 bucks. So why should you sell at that 90 or at 95 bucks when you can easily wait for it to come to 100, then you sell? This is business. Just the value of petrol and everything. This is just relate forex like your normal day-to-day business. Think. I'm in the market. You are in the market. Just look at yourself as if you are actually in that market. Whatever market you have around you, or you are in a grocery store or whatever, minimart or wherever you are. Now think, you are in the market, you want to do shopping, you want to buy or you want to sell. This a thing. Whatever we are doing here, we want to buy or we want to sell in order to make profits. So now is the time for us to think. There is no need for you to rush. This is forex. You are making this trade, this prediction with your money. Nobody is sure. We are not certain of what is going to happen. But because of the knowledge we have in this market, it gives us some let's say an edge to understand what might happen, and based on that we make our predictions. So you just have to think this is normal market. You don't have to jump. You are trading with your money. You lose your money. So why the hell you want to rush? You are going there to give market. When you want to give the market your money. So why should you rush in order for you to put your money in? So you have to wait. Always wait for the correction. Always ensure lower price when you are buying. You want to buy at a very lower price and you want to start selling at a very good higher price. So I want us to pay attention to this. So like I said, so this you wait for this retracement, you buy. So now just like the way we did in the previous round, also let me delete this. Like what we did in the previous class, this is also the same thing. How do you know when you want to buy or when you want to sell when the market is going down? So when you see something like this movement, sorry, you see this correction and you also see a movement like this trending down and you see this correction. So in this way, you know that okay, this market is now actually going down. So because of this market is going down, what you need to do now is for you to come here and pick your horizontal line. So you can see we have this structure being broken. This at this region here. You also mark here, this is a support here. So you mark the support line also. This is also a support here. But now, based on what you can see, this market is trending down. So you wait for this price to break out of this support. This is a support region here. You wait for it to break out. It's very important for you to wait for it to break out before you make your trading decision, because we can have the market changing direction, finding a support here, forming double bottom and moving back up. So you wait for this to break out. So upon you having this breakout, do not jump into the trade that you want to trade. Wait for it to come back to this, turns to a resistance. So on this resistance is where you'll be looking at you entering into the market and selling. It is very, very simple. That is how you trade using the market structure. Now let's look at some real life example. So remember, for us to check this, we have to take this chart to where the market is actually in a downtrend. So for us to see this very fast, we can as well just take this to let's say 1 hour. Yeah, we can take it to 1 hour. Let me clean this chart of all drawings. Sorry. Okay. So yeah. So now let's try to zoom out. We can also use 4 hours for fast, so that we can also see this very fast. And I want to believe that we all are with our own chart as well, and we can see all this. So yeah, so you can see on 4 hours we can see a very quick and clear picture of market trending down, and which we are going to see here as well. So we have something like this. So we have market ranging, they have a trend down. So now look at this. This is, let me make this like this. So the trend is not that much, but we can still see some examples here, which is what we have here, starting from here. So this is a low, this is a low. We have this coming back here, forming another low. Then we have this correction here. You can see the correction here. After this impulsive movement, we have this correction here, forming what, a lower high. So now if you look at, let me pause here. Remember what I said, that okay, when we have something like this coming up in correction, another impulsive movement here, you are able to see this trade like this. What you do here is you come here, you mark this point here, because this point here with your horizontal has become, this is why you mark this point here, is because this point serve as a support for this price to pull back up. Now because this is a support for this price to pull back up, now you wait for this price so that you can confirm that this is indeed a downtrend. You wait for it to break out of this support here to a point here, and you wait for its correction before you get in. Now because of this is a support, you put your line there. So now what you are waiting for is when this market pull to this particular resistance zone, you will be looking for a sell. You want to sell here because this is going to be a resistance. Since this serve as a support, it means this support is very strong. So you are waiting for the price to come back to the support region here and you go for your sell. So on this type of trade here now, what you are looking for is you want to sell, but you will be looking at, okay, I want to short here. So when you put your sell at this point here, now your stop loss should be here after the previous low. Now let me show you the previous low here. Look, after we have this breakout of this support region here, this is our last candle here, so you can put your stop loss here. But ideally, if I want to trade this trade, if I want to enter this trade, I'm going to put my stop loss here. So to give my stop loss a breathing space, because of I know that, okay, this is you can put your stop loss there. This is the low, the previous low, and also I have a candle here showing a wick, which is a nice wick. I know that yes, there is a rejection from this region here, so I can extend my stop loss there. So now where are you going to target? So your first target is going to be here, because this is where we have our line. This is where we have a correction coming from. So this place that we have this correction coming from here is where I'm going to put my TP1, and you can see this is like 1:2.8, 1:2.8, close to 1:3. It's very sweet. And if I should put my stop loss here, I'll be getting 1:5. So yeah, like I said, be more safer, which is where I put my stop loss here. It's even 1:3. So you put your stop loss here above this, above, you just give it a space, or you put it above, so you will get at least 1:3 from this. You can see you target here, which is your TP1. You know that it's going to come here, which is this from this point here where we have a correction that formed this support region here. Then you can extend your TP2 to go. So after you taking out of your TP1, you can use your trading stop loss, like you take part of your profit or you close part of your position, you allow the rest to run. So when you see a confirmation of a reversal, then you know that this is the time for us to get out of the market and wait for another correction. So now there are major trend, there are also minor trend, meaning that you have trend that form under trend. Now look at this downtrend. This downtrend continues. Do you know what made this downtrend value? Now we have another one here. Look at what we have here. So after we have this here, we have this market trending down, forming another lower low. If you look at this, forming another lower low. But now look, when we have this going, we have this the price, the candle moving over, did not find support, did not find a resistance around this region here. Remember I said we should have something like this. So have something like this here. So now look at what happened here. So instead of this to find a resistance here, it didn't find a resistance here. It broke through the resistance, but it never moved above this region here. Assuming this candle close above this region here, then you are going to see a change of trend. This might just come here, retest back and start going up. Now we are still pretty much in an uptrend because this did not break through this high here. So this, remember, this is our lower high. So because of this did not break through this lower high, it means the uptrend is very valid. So if you place your entry here and you lose your trade, you can as well place your entry here, which makes you valid that this downtrend is pretty much valid, very, very valid. But that you understand that on as we proceed on our next trade. So there are very ways you get your confirmation. You can see market trending up, trending down. I did not say you should enter from 4 hours. Remember, just take it to a lower time frame, look for your perfect entry and enter your trade. So there are series of examples. You can see series of examples of uptrend. You can see another series of example of downtrend, going, forming lower low, lower high. Just understand the market structure. I know the market might be a bit of this, like having different candles, patches, but the most important thing is just zoom out and look for the structure. You can easily, this is an uptrend. You know what you are looking for here is opportunity to buy, and on the downtrend you look for opportunity to sell. So that is that on that. So on our next class, which is the phase 3, we talk about the ranging market. After talking about the ranging market, we check some example, then we go into details how we can match everything together to trade the smart money concept. See you at the next class.